All right, let's unpack this. When we talk about the essential building blocks of our modern world, what often comes to mind? Well, today we're taking a deep dive into a very specific and, frankly, incredibly important corner. Platinum group metals, or PGMs, you might know them best from catalytic converters in cars, perhaps. But as we'll explore, their story is really evolving in some fascinating ways, especially, as the global energy landscape shifts. We've pulled together a stack of information for you, mostly from Platinum Group Metals, Ltd's latest project updates and financial reports. We're specifically focusing on their Waterberg project and their wider strategic outlook.
Yeah, and what's fascinating here, I think, is how we can extract the most important nuggets, not just to understand what's happening on the ground with a major mining project like Waterberg, which is interesting in itself, but also how it fits into the bigger picture. Global supply chains, the energy transition everyone's talking about, and even local community development.
Yeah.
So our mission really is to give you a shortcut to being truly well-informed on this vital, and let's face it, often quite complex sector.
Right. So we're going from the nitty-gritty project details right up to, well, the global market dynamics. All right, so to really get into this, let's zoom in on the heart of the deep dive. The Waterberg project, this isn't just any mine, is it? It's being envisioned as something, well, quite significant.
Oh, absolutely. It's a major undertaking. The Waterberg project is situated in a really key location on the northern limb of the Bushveld complex in South Africa, prime PGM territory. The plan is for a fully mechanized, shallow decline access mine, so modern mining techniques. Its primary output: platinum, palladium, rhodium, and gold. Those are your core PGMs. Plus, you get copper and nickel coming out as valuable byproducts, too. And the projections are, well, ambitious is the word. It's expected to be one of the largest and, importantly, one of the lowest-cost underground PGM mines globally.
Wow, lowest cost globally. That's a huge projection. So with such an ambitious vision for Waterberg, what are Platinum Group Metals' immediate near-term objective? What are they really pushing for right now?
That's the crucial question, isn't it? Their immediate focus is squarely on getting the project to a definitive development and construction decision. That's the big hurdle, which means, practically speaking, arranging the construction financing. Big money involved. And locking in concentrate offtake agreements. Basically, find buyers for what they dig up. And beyond the mine itself, they're also pushing forward with an intriguing initiative through Lion Battery Technologies, Inc.
Ah, yes, the battery angle.
Exactly. They're exploring how platinum and palladium can actually be used in lithium battery technologies. It's a collaboration they have with Valterra Platinum Limited, used to be Anglo American Platinum Limited, and Florida International University. It's quite a strategic move,
Yeah,
Could potentially broaden PGM demand quite significantly down the line.
that is fascinating. Diversification. Okay, now, for a project this size, understanding who the players are is absolutely crucial. So what does the ownership structure look like for Waterberg? You said it's a JV, a joint venture.
It is, yes. Waterberg JV Resources, or Waterberg JV Shown, technically owns the project. And the ownership, as of May 31st, 2025, is split like this. Platinum Group Metals itself holds a 37.32% direct interest. Then you have Namnambo Wiku Consultants, a key partner, with a substantial 26.00%. HJ Platinum Metals Company, or HJM, has 21.95%. And Impala Platinum Holdings, Implats, a big name in the industry, holds 14.73%.
Okay, so PTM has the largest single stake, but it's spread out.
Well, yes, but there's a nuance there. Platinum Group also holds a further 12.97% indirect interest. How? Through a 49.9% stake they own in Namnambo.
Ah, okay.
So their total exposure to the project is actually larger than that initial 37% suggests.
Right, got it. And HJM, who are they exactly?
Good question. HJM is relatively new, established in 2023. It was set up by the Japan Organization for Metals and Energy Security, that's JOEM and Hanwha Ltd. It's essentially a special purpose company, designed specifically to hold and fund their combined future equity interests in Waterberg. And it's worth noting, JOEM is expected to fund the lion's share, about 75% of HJM's future equity investments. It really highlights significant Japanese strategic interest in securing future PGM supply.
Okay, that paints a clearer picture of the players. We've got the vision, the partners. Let's shift gears a bit. Let's look at some of the key moves and milestones recently. What's been happening? What's the momentum telling us about their path forward?
Right. Let's track the recent activity. Most recently, May 29, 2025, they closed a non-brokered private placement, sold 800,000 common shares to Hoskin Consolidated Investments Limited, HCI, through Deepkloof Limited. That brought in gross proceeds of $1.0 million. And strategically, it allowed HCI to get back to a 26% interest in the company at that time. Shows commitment from existing shareholders.
Okay, so shoring up key investor positions.
Exactly. Then going back a bit to February 18, 2025, the Waterberg JV Co. board unanimously approved an interim budget, ran $42 million, which was about $2.27 million then. This is to keep essential work programs going until August 31st, 2025. Things like components of a larger $21 million pre-construction work program that had already approved in principle back in October 2022. So steady progress.
Right, keeping the wheels turning. And what about funding? I saw something about an at-the-market program. How did that work out?
Ah, yes, the ATM program. That's quite a flexible funding tool. They entered into an equity distribution agreement back on December 5, 2024 for this new ATM program. It allows them to distribute up to $50 million in common shares over time directly into the market.
Okay.
Sales kicked off January 22, 2025, and by May 31st, they'd issued about 4.35 million shares at an average price of $1.32 per share. That brought in $5.75 million gross proceeds. Expenses were around $1.09 million.
So net positive cash flow there.
Correct. And it didn't stop there. After May 31st, up to the date of their news release, they sold another roughly 4.17 million shares. Average price was higher too, about $1.60 per share. That netted them another $6.52 million.
So it's been quite successful then, this ATM.
Seems so. And the use of those net proceeds is key. It's going straight into Waterberg pre-construction site work, engineering, prep work, potentially phase 1 development. Plus, funding that Saudi Arabia Smelter BMR feasibility study we'll get into, contingency and general corporate stuff. It's a steady drip feed of capital.
Okay. And Saudi Arabia keeps coming up. What was that MOU about in November 2024?
Right, that was significant. November 26, 2024, they signed a Memorandum of Understanding, an MOU, with Ajlan & Bros Company for Mining. That's a subsidiary of a big Saudi conglomerate, Ajlan & Bros Holding, and also the Ministry of Investment of Saudi Arabia, MISA.
MISA itself. Interesting.
Very. It's part of Saudi Arabia's Global Supply Chain Resilience Initiative. The purpose? To study a proposed PGM smelter and base metal refinery, a BMR, in Saudi Arabia. This built on an earlier cooperation agreement from December 2023 between Ajlan and the company. And MISA's role is potentially huge, offering strategic guidance and even studying potential financial support for both the Saudi smelter BMR and the Waterberg project itself.
Wow, okay. That's a serious potential partnership.
It signals major strategic interest, absolutely. And supporting these kinds of potential moves, back on November 13th, 2024, they filed a final short-form base shelf prospectus in Canada and a corresponding registration statement with the U.S. SEC.
Which means?
Basically, it gives them the regulatory green light to offer and sell various securities, common shares, debt, warrants, you name it, up to an aggregate initial offering amount of $250 million. It's valid for 25 months. Think of it like having pre-approval to raise significant capital quickly if needed. Financial flexibility.
Got it. And didn't they update the project's feasibility study too?
Yes, a key technical step.
Oh, yeah.
September 16, 2024, they reported positive results from an independent definitive feasibility study. Update the Waterberg DFS update. The full technical report was filed October 9, 2024, prepared according to NI 43101 and SK 1300 standards. Crucially, it included revised mineral resource and reserve estimates, essentially updating and confirming the project's technical and economic basis.
Okay, a lot of moving parts there. Beyond the project itself, the financials always tell a story. Let's briefly look at the numbers for the 9 months ending May 31st, 2025. What's the headline?
Well, the headline is probably careful management of resources while advancing the project. The net loss for that 9-month period was $3.4 million.
Which sounds like a lot, but
it's actually an improvement compared to the $4.02 million net loss in the same period the year before. So things are tightening up. General and admin expenses were slightly up at $2.78 million, but that was partly due to a legal cost reimbursement they had in the previous period, making that number look lower. Stock-based compensation was quite a bit lower, $0.79 million versus $1.61 million, mainly due to revaluation factors. They had a small foreign exchange gain, about $0.06 million, mostly because the U.S. dollar strengthened against the Canadian dollar, and earned about $0.14 million in finance income. Mostly interest.
And for share?
Basic and diluted loss per share came in at 0.003 cents, down from 0.04 cents previously. On the balance sheet side, they hold cash in Canadian dollars, U.S. dollars, and South African rand, obviously subject to exchange rate fluctuations. Accounts receivable were $0.22 million. That ATM proceeds receivable we mentioned was $0.07 million at the time, and accounts payable and other liabilities stood at $0.75 million, mostly things like professional fees for regulatory filings, project engineering, and maintenance costs.
Okay, so managing costs. What about spending directly on Waterberg itself?
Yes, specifically on the Waterberg project, expenditures were approximately $1.6 million for those 9 months. That's before getting reimbursements from partners. And looking at the bigger picture, the total accumulated net cost capitalized of the project by the end of May 2025 reached $48.0 million. Since inception, total spending on the property is around $91 million. So a significant investment already sunk into proving up this asset.
Right. Now let's get back to that Saudi Arabia smelter idea. This next bit is fascinating, how global supply chains and national interests can really collide. You mentioned the initial plan, but that's evolved quite a bit, hasn't it?
It really has, and it's a perfect example of adapting to realities on the ground. So yes, the initial cooperation agreement from December 20, 2023 with Agilent was absolutely focused on studying a standalone PGM smelter and base metal refinery in Saudi Arabia. The plan had 3 phases: a global PGM concentrate market study, then a full definitive feasibility study for the smelter itself, and finally an option to form a 50-50 JV.
So what did those initial studies show?
Well, they did an initial trade-off study back in mid-2023. Looked at the basic viability of shipping South African PGM concentrate all the way to Saudi Arabia. Then, a more detailed market study, finished in late 2024 by a global consulting group, came back with an interesting finding. It suggested that a combination of concentrate from the Waterberg project plus end-of-life auto and petrochemical catalysts sourced from the Gulf region could actually justify the scale needed for a long-term PGM smelting and refining complex in Saudi Arabia.
So technically, it looked workable.
Technically, yes. Plausible.
So if it was plausible, what changed? Why the pivot?
The critical factor. National interest and regulation. A key requirement for building that facility in Saudi Arabia would obviously be getting long-term approval from the South African government to export unrefined precious metals in concentrate form.
Right. Exporting raw materials versus processed goods.
Exactly. And through discussions, it became clear that the government of South Africa expressed a strong preference and indeed support for beneficiation, adding value within South Africa. Their priority is local job creation, local economic value, not just shipping raw ore out.
Makes sense from their perspective. So what's the new plan?
The new concept, the one currently being considered, is quite different. It involves establishing a matte furnace in South Africa, ideally close to the Waterberg project itself, where they could potentially use existing power, water, and environmental authorizations.
Okay, so initial processing in SA.
Precisely. This furnace would produce something called converter matte. It's a much higher grade, more concentrated intermediate product. That matte would then be shipped to Saudi Arabia. There, it would go through a base metal refinery where it could be co-processed along with those spent auto catalysts and other PGM-bearing materials from the Gulf region.
Okay, wow, that sounds like a huge difference logistically. What does that mean for the volume being shipped? It must be way less, right?
Oh, it's a massive difference. A game changer for logistics, really. Instead of shipping up to, say, 130,000 tons of concentrate a year, which, just to picture it, is roughly 14 big concentrate trucks leaving every single day.
14 trucks a day.
Yeah. Instead of that, the volume of this converter matte they'd ship would be reduced to approximately 8,000 tons a year.
8,000 versus 130,000.
Exactly. That's roughly just 1 truck a day.
Huge difference.
Massive. Think about the reduced shipping costs, the lower carbon footprint, the simplified handling.
So where are they with this new plan now?
Right now, the company and Agilent are actively conducting a trade-off study on this revised scenario. And they're developing the scope of work and cost estimates needed for the proper engineering studies. It really shows they're trying to find a workable solution that ticks the boxes for commercial viability and satisfies South Africa's beneficiation goals.
That's a really interesting strategic pivot. Okay, looking ahead then. What's the fundamental business objective driving everything Platinum Group Metals is doing?
Fundamentally, it's all about advancing the Waterberg project towards that final development and construction decision. That's the North Star. PDM operates the project day-to-day, but they're directed by a technical committee. That committee includes reps from all the partners, Implats, Mnambo, and HJM, so it's a collaborative push.
And what's happening on site now under that pre-construction budget?
Well, they've just completed the exploration and engineering work needed for that updated feasibility study we talked about. And they're actively working on the essential groundwork, things like getting the initial road access sorted, securing a reliable construction water supply, setting up basic site infrastructure and facilities. They're even building a first-phase accommodation lodge for workers and sorting out the site construction power supply from Eskom, the state utility, all crucial practical steps.
Absolutely. And with a project this size impacting the local area, community relations are vital. How is the Waterberg Social and Labor Plan progressing?
Yeah, ESG, environmental, social, and governance and community work are definitely central to their approach. They seem to be making real strides. Work under the official Waterberg Social and Labor Plan, the SLP, is underway and more is planned. They've completed some community infrastructure projects, with more ongoing. Back in 2023, they did skills and needs assessment surveys in the local communities. That helps tailor their education and training programs effectively.
SART.
Yeah. And in 2024, for instance, 49 learners from host communities finished a portable skills training program. They've also granted 15 tertiary education bursaries between 2023 and 2025. It seems like there's ongoing engagement with local communities and their leadership. That's apparently led to agreements on where to put project facilities and infrastructure. The stated goal is optimal outcomes and shared value for everyone involved.
Okay. And getting back to that construction decision, what else needs to fall into place?
Two big things, really. First, as we discussed, they need firm arrangements for either offtake selling the concentrate or processing it, like with that Matt Furnace idea. So the company and the JV Co. are assessing all the commercial alternatives for mine development financing and concentrate offtake. It's happening in parallel. And besides the Saudi option, they've also been talking to all the major smelter operators in South Africa, including their partner Implats, about potential formal concentrate offtake deals, keeping options open.
Right. Now, let's broaden out again. The world is changing, and demand for materials like PGMs changes with it. How are big trends like decarbonization, the rise of electric vehicles, how's that impacting the PGM market?
It's a really dynamic picture, actually. For a while, the thinking was clear. Widespread adoption of battery electric vehicles, BEVs, would drastically cut future demand for PGMs and catalytic converters.
Because BEVs don't need them.
Exactly. But more recently, the rate of BEV adoption has, well, maybe slowed down a bit in some key markets, or at least hasn't met some of the more aggressive forecasts. There are several reasons, maybe patchy charging infrastructure, especially in emerging markets. We're also seeing a noticeable consumer shift towards hybrid vehicles, which do still use PGMs. And potential supply chain bottlenecks for battery components might be playing a role too. Now, growth rates vary wildly. China, for example, has seen huge BEV adoption. But the overall story for PGM demand is definitely more nuanced now than it looked a couple of years ago.
So maybe not falling off a cliff just yet.
Not necessarily. And what's really interesting is the new demand drivers emerging. The unique catalytic properties of PGMs are incredibly powerful, and they're being applied to new technologies for more efficient energy generation and storage. That Lion Battery Technologies initiative we mentioned earlier, that's a prime example.
Because of battery research.
Yeah. That partnership with Valterra and FIU is a genuine opportunity in lithium battery research. For the company, investing in Lion offers potential vertical integration down the line. But it's also about broader market development, helping bring new technologies that use palladium and platinum to market. And the research results from Lion might even apply across most types of lithium-ion and lithium-sulfur batteries, so broad potential impact there.
Okay, so new uses emerging. But there are always uncertainties too, right? Tariffs, geopolitics.
Absolutely, you have to factor those in. For example, new global tariffs, like the ones recently announced by the U.S. administration, layered on top of existing ones, especially hitting things like cars and light-duty vehicles. That definitely injects uncertainty into the markets.
Even if PGMs themselves are exempt.
Yeah, platinum and palladium are exempt as critical minerals, which helps, but general uncertainty remains. Because it could spark retaliatory tariffs from other countries or push markets to diversify supply chains, which disrupts trade flows. And of course, overarching geopolitical tensions, international conflict, trade disputes, all that can always create volatility in energy markets, supply chains, financial markets, all potentially negative for PGM demand if things escalate.
Okay, so a complex mix of headwinds and tailwinds. But despite those challenges, we've actually seen PGM prices doing quite well recently, haven't we?
That's correct. There's a counter-narrative there. PGM prices, both platinum and palladium, have seen increases lately. It seems to be a combination of factors. Strong demand, particularly out of China, persistent concerns about supply, especially from major producers like South Africa and Russia, and renewed interest from investors looking for hedges or value plays. Specifically, platinum's getting a boost as a substitute for gold in jewelry in some markets, and also as investment hedge. And palladium demand for catalytic converters has remained surprisingly strong, maybe stronger than some expected given the BEV forecasts.
Right. Okay, one last area to touch on. Responsible development. ESG reporting is huge now.
It really is. It's table stakes for any major project now. Platinum Group received its fourth annual ESG disclosure report from Digby Ltd. Digby is a UK-based outfit, provides an industry-standard framework. For 2024, PTM achieved an overall score of BBB. The range goes from CC up to AAA.
So solid middle ground.
Seems like a respectable score. And importantly, the Digby ESG framework aligns with global standards, like the Equator Principles used in project finance. So it signals commitment to responsible practices.
And there was a regulatory note you mentioned.
Yes, just for transparency. Their consolidated financial statements for the fiscal year ending August 34th, 2024. The audit report included what's called a going concern emphasis of matter. This is actually a required disclosure under NYSE American Company Guide rules in certain situations. In simple terms, it highlights that, like many companies at this development stage, they rely on continued access to funding to keep operations going forward.
Standard for a developing mine, perhaps.
Often, yes. But it's important context, and we always encourage listeners, if you want the full details, check out the risk factors section in the company's annual information form, AIF, and their Form 40F filed with the SEC.
Okay, great. We've covered a lot of ground. We've journeyed from, the deep earth of South Africa's Bushveld complex right through to cutting-edge battery tech and these complex global supply chain negotiations. It really is a testament to how interconnected everything is, how one group of metals can touch so many different parts of our world.
It really is. And if we try to connect all this back to the bigger picture, maybe the question this deep dive leaves you, the listener, with is this. How is that increasing global need for critical minerals, driven by the energy transition, going to balance against individual nations' very understandable desires for local value creation for beneficiation? Especially when, as we saw with the smelter example, those global supply needs and national interests don't always perfectly align right away. It's a really complex puzzle, isn't it? Touches on economics, politics, local communities, all at the same time.
Definitely something to mull over. A fascinating balancing act. Keep exploring, keep questioning, and thanks for joining us on this deep dive.